Okay, so if you guys need to look at foreclosure statistics, foreclosureradar.com, I love this website. On the homepage of Foreclosure Radar, on the right, is a button, Washington Real Estate Stats, and here's what we're seeing. So, foreclosure filings, so these are people who have received the notice of trustee sale. We're actually seeing a slight decrease in people receiving a notice of trustee sale. That's a good sign, okay? The thing this isn't telling us, though, is that the foreclosure timelines in the state of Washington, instead of being 6 months like they're supposed to be, are currently averaging 13. So just because notice of trustee sales are down doesn't mean they aren't distressed, doesn't mean they haven't received an NOD. It's just the bank hasn't issued it to tell them they're foreclosing.
Right. Because the banks are backed up.
Because the banks are backed up, because they're also being more proactive on their short sales. They're being more proactive on their loan modification programs. Okay? But if those people are unsuccessful in those, they will go to foreclosure. And I was reading a stat, and I'm just going to butcher it because I don't fully remember it off the top of my head, but I think it was published by the Mortgage Bankers Association. They said 10% of the people who get greater than 90 days behind on their mortgage recover. In other words, 90% never recover, and they go to foreclosure.
That was 90 days late?
That was 90 days late.
10% of people that get 90 days behind.
Yeah, recover. So you have to think about what the stat isn't saying. It was on the reverse of it. That says 9 out of 10 never recover once they're 90 days late.
I'm actually surprised it's that high. Honestly, the recovery rate, I would think it's less people than 10% are able to recover so high.
They may have calculated the stats to their benefit. Because statistics is all just how they're portrayed. I mean, you can pull the numbers out and make anything look the way you want it to. Overall, for the state, foreclosure outcomes, what's interesting is you've seen an increase in the amount of cancellations. Okay, so these are notice of trustee sales that are scheduled, and 48.18% across the whole state you've seen a 48.1% increase in the number of cancellations. In other words, they're really trying to work with these people on loan mods. They're trying to work with them on short sales, and so even though they have an auction date scheduled, they kick it out. That's a pretty large increase. Also, across the whole Washington state for foreclosures, you've seen REO inventory increase by 61.97% in the last 12 months. So a 62% increase in the total number of properties that did not have a successful bid at the auction that then reverted to the lien holder. So what you're seeing because of that...
Was that 62% an increase?
Yes.
And that's sold to third party, that's foreclosures that are sold to third party at the auction.
Absolutely correct. So you're seeing a decrease of 3%. So either the opening bid is not being discounted enough or whatever, but literally the number last month was 163 in the state of Washington sold to a third party at the auction.
Versus 1,500.
Sorry, what was the number this year? Or this month?
For May 2011, it was 163 as compared to 1,495 that reverted. And there was 1,673 that were canceled.
So only 1% sold to...
Yes, absolutely correct.
And the rest of them were reverted back to the bank.
Reverted back to the bank, that will be coming on the market as an REO property eventually.
How much shadow inventory is sitting there right now?
I love that you asked that question. I don't know for the whole state, but I did calculate it for Snohomish County. So foreclosure inventories, scheduled for sale, a slight decrease, so approximately 16%. But right now in the state of Washington, you have 11,566 properties scheduled for foreclosure auction. And you have properties that are owned by the bank, not necessarily on the market. It's up 57.6%. at a total of 12,178 units.
So there, but we don't know how many of those are on the market.
Correct, sir.
Yeah.
Okay, let me make sure I have that correct. So the 12,000 number is how many are currently owned by the bank?
Yes,
And the 11,000 number is the ones that are scheduled to auction when?
scheduled
Just
to auction,
anytime, period.
just scheduled,
Okay.
yes. So in other words, this 11,566 have a notice of trustee filed on them. So there is a specific auction date. Okay.
And that's just for Washington, that's not for Snohomish County, correct?
We're going to Snohomish County right now. Okay, so our Snohomish County foreclosure stats. Da, 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 da. Seeing the similar trend that you saw for the overall state. So we're slightly down in the number that are scheduled for sale. There was 536 scheduled for sale, or excuse me, 531 scheduled for sale in May. Here's the interesting stat. So the amount that reverted back to the bank has increased 52.8%, 81%, and your cancellations are up 54.79. So once again, those cancellations are most likely they are trying to work out a loan mod, or trying to work out some type of short sale, or they may have gotten current. But as we discussed before, this probably only represents 10% of the populace that does that. See, the negative equity situation compounds this greatly, because what happens is the mindset of the individual changes when they get hundreds of thousands or 50,000. You know, I would say probably anything over 50,000 in negative equity, their mindset totally changes. Even if they could get current, they just,
Why?
they're like, why? Especially with the market still depreciating. Okay, so foreclosure inventories in Snohomish County. There are currently 2,190 properties scheduled for sale. And there are currently 2,420 bank-owned or REO properties. So what I did was I took that stat of the total number, because I pulled the MLS statistics for May to figure out, you know, the 38.87% of the sales last month were REO. And then I took that number and I divided it by this. Okay? So I took the total number of REO sales in May, and I divided by the total number of REO properties available. There are 11.5 months worth of REO properties hanging out in shadow inventory right now,
Yeah, given the current rate of what we're selling right now.
given the amount that reverted and the amount that sold in May.
And
Yes.
that's not going to change because the amount of foreclosures that are slotted are the same as well. So I mean, we can expect that.
The amount scheduled for sale right now has only decreased 3.31%. So we would expect that number to continue, but what I would actually expect to see happening, because inventory has gotten so low, is that they will start to release more properties, because banks aren't stupid. I mean, let's say I'm selling tomatoes, I'm not going to flood the market with tomatoes and cost myself money. What I'm going to do is I'm going to strategically release those properties in order to make it happen. And another reason that properties hang out in shadow inventory is things like they have title issues, or they have tenants inside the property, okay, that have like a bona fide lease, and they're there for a long time. I have 5 properties that are with Sterling Savings Bank that are currently going to an auction, and all 5 are tenant occupied, and the bank has worked with them, and they will sell them tenant occupied, but they have sat in their inventory already for 3.5 months without them doing anything about it.
So, and in the foreclosure and in the transfer, they have to honor that lease.
If it is a bona fide lease, there's a whole huge thing that's come out as tenant protection and stuff. The bank can offer the occupant what they call cash for keys, which is an incentive to move, but the occupant does not have to take that. And if the occupant has a bona fide lease, so bona fide leases are things like, you know, are they paying market rent? Is it not from an immediate family member? You know, can they show that they've actually made the payments? Things like that. Then they can't kick them out. Now, If they choose not to accept cash for keys and they don't have a real lease, then they just go through the eviction process. And the eviction process right now is probably 75 days.
Right.
Yeah.
So we're talking about bank inventory, but we're also, we're not even talking about what's just regular sold out there in the regular market.
Well, we talked about what sold. We talked about everything that sold as one complete whole.
Yeah.
So-
Okay, so this isn't added on to that?
This is the 11.5 months would be in addition.
To the 5.5 months or whatever?
Yes, correct, sir.
Okay.
There are, based on the calculations on the total number of, and this is not perfect.
Sure, I understand that.
So, but based on our total number of sales last month that were bank-owned properties, the amount of bank-owned properties that are currently sitting active inside our MLS, and the amount that this data says available, there's 11 months. 11.5. That's
Yeah.
chilling.
Yeah, besides short sales and regular
Yes.
private sellers
Yes.
and builders.
Yes, absolutely correct.
That's 5. Interesting.
So just to kind of refresh on this chart right here, there was, from May of 2011, there were 684 sales total. Well, that's 4 months if you just sold REO properties. Do you see how we figured that out? And of course, REOs can't make up 100% of the market. It's just impossible. Any questions, thoughts, ideas? That's stats.
Cool, man. Thank you.
Wow.
Looking good. Well, that's why I expect to see it depreciate more. The only way our depreciation will stop is Boeing. Boeing does really well with their Dreamliner that they're supposed to start selling, and they start hiring a bunch of people. One Boeing job, according to something from the Seattle Times, creates 3 other jobs. And they're above the median income for the area.
And on a similar note, what I've heard is there's a lack of good mechanics out here. So we have a depleted workforce when it comes to that. So we're going to see probably an influx of reload people coming into the area.
Interesting.
I like it.
Yeah.
You know, and so that's you know, when they have to do talent searches, that's great for us.
Plus the Japanese need a place to land. They don't want to be living I mean, honestly, in nuclear fallout zones, so they're
Yeah.
and Seattle's a perfect port for them.
Yeah, yeah. You are seeing some relocation, absolutely.
Huh. Plus we have a strawberry festival every year.
Yeah.
Which evidently attracts back.
Well, on the other note, you have to be thinking about too, for investors, people who are genuinely going to buy properties, this is probably the best opportunity. This year and next year is probably the best opportunity you're going to see, because interest rates are historic low, and quantitative easing is ending. Okay, so Bernanke just said we're not going to spend any more money on it, but what we're going to do is we're going to work to keep the Fed fund rate low. Yeah, I mean not the Fed fund, the overnight rate low to the banks. Okay, so they're going to try and keep interest rates low, but they just finished their last round of spending, and the last round of spending was like $600 million. Okay, and what they're doing is with the toxic assets that were purchased, they were using the money that those assets were generating cash flow to go and buy treasuries. So it's just this weird way of, hey, we print money, oh, we go buy our own debt, and by forcing extra liquidity into the market, what it does is it sucks down interest rates. But that's ending. So interest rates, he said, I'm quoting basically, he said we don't see them coming up in the foreseeable future. So in other words, they're going to try to keep them down, but there's a lot of external factors that they can't control, like inflation, like the fact that the global economy also affects our interest rates. Okay? I mean, there's a lot of money that's been spent to keep interest rates low. So when you're talking to investors, you know, if I was a betting man, I would bet interest rates have to go up. and your interest rate is going to make more of a difference on your purchase than the fact that the market's depreciating. So you would want to buy now versus buying later. That's just my 2 cents. Also, what we're seeing too is we're starting to see things that cash flow. A lot of things. I have a house in Schultes on 135th. It's $105,000. It's fully livable. It needs a little siding. I mean, $5,000 this house is ready to rock and roll. That house would cash flow instantly. And you're starting to see that because the rental population is also increasing. So all of these foreclosures are displacing people from their expensive home, and they have to move somewhere. So
I
they're
wonder what that percentage is of people who go from, because there's obviously some strategic foreclosures.
Yes.
I bet those people are not buying a house right away.
No.
You
You
can't.
know, it's probably a lower, yeah, right, you can't. So 98% of those people are going out into the rental market.
Exactly. So you're seeing people who used to have, let's just say, a $2,500 payment who are now looking for a $1,500 payment to rent.
Right.
Because they're trying to get more affordable. I'm hoping they're trying to also clean up their other debts and start up their savings. Because on a national level, what you've also seen is you've seen Americans are saving more than they've been saving in the last few
We're actually
years.
at negative savings rate for the last 5 years prior to, I think, 2010.
It's because we like our plastic.
Yeah. No, we like our stuff.
Yeah. Well, but we had to use the credit card to get it, is what I'm saying.
That's just the means to the end.
Yeah.
So you're seeing a forced increase in the rental population. And the other thing that is happening is in the Swanepoel Trends report, they talked about how the multifamily properties are one of the good performing sectors in commercial because of that. So multifamily being your big apartment complexes. So for your investors, hey, right now is the time, and yes, I know you're gonna have to put 25, you maybe even have to put 30% down, but right now is the time to be doing your buy and holds.
Yeah.
Buy and hold, think that you're going to be doing a 5 to a 10-year hold, you're going to be getting the cash flow off that property, you're going to ride that first wave of appreciation, and you're going to roll that. I mean, it's an unbelievable opportunity. We sold another house over here in Everett for like $67,000.
Wow.
Yes, it was absolutely beat.
Payments $400 a month.
Your payment's $400 a month.
Yeah, and they're renting it out for $800.
Exactly. I mean, that's unheard of.
Yeah, that's awesome.
I just hope that the prices don't go. And you're like, okay, I got this chicken. I'd like to trade this chicken for this house.
Yeah, no kidding.